Okay, now we're going to have 4 different sessions now. Great speakers. We're going to have 1 panel in between them. So we are like 5 minutes late, so let's save some time and be quick to announce our next speaker. I guess you heard about Coinsillium. It's a UK-based company, and the founder and CEO is Eddy Travia is here with us. He's going to tell you more about the company, and also he's going to talk about ICOs, facts, fiction, and future. So, round of applause for Eddy. A big applause, please. Good to see you here. Yeah, thanks for coming. So, stage is yours.
Thank you. Hi, everyone. Very happy to be in Istanbul, one of my favorite cities. And I'm here to talk to you about, as Arda said kindly, about Coinsillium, which is a company I've co-founded, and as well about ICO and the environment and a different the elements of my experience in this space. I've been active in this space since 2013. So in 2013, the context is, I've been told about Bitcoin. Like many of us, when we hear about Bitcoin for the first time, we can be a little bit skeptical. What is this internet money? How does it work? And in 2013, 2 things happened. There was a massive bail-in in Cyprus, one of the first ones, where the European Central Bank and the IMF asked Cyprus to actually take money out of the deposits and the bank accounts. And at that time, the mainstream media started talking about Bitcoin, saying, well, this cannot happen with Bitcoin because, you know, you cannot confiscate Bitcoin. So I was thinking, okay, I've heard about Bitcoin. I know I have a friend who is involved, and this is coming up in the mainstream media as well. And then there is a fund that I knew from China. I was in Hong Kong at the time, which is called IDG. And they invested in this company that was very small and that not many people knew about. It was called Coinbase. And that was the first round of Coinbase, which is a few $1 million at the time. So my idea was, instead of just buying Bitcoin and holding on to it, my idea was, let's help the startups, let's help the ecosystem, and let's help building the infrastructure. And that's why I created the first global incubator in this space called Seedcoin. So basically, seed stage investment. And then very quickly, because there were not so many investors publicly endorsing blockchain and Bitcoin at the time. Actually, the buzzword was Bitcoin, not yet blockchain, 2013. Then we quickly made a lot of connections and started going around the world, organized the first conference in Singapore called Bitcoin Singapore in 2013. We had a lot of the early pioneers and entrepreneurs come, and that's how we started building this company called Coinsillium, which is actually on a public market, a stock exchange in London. So now today, Coinsillium is a venture builder, an investor. We also have an advisory role to a few ICOs out there. And I will explain a little bit the challenges for entrepreneurs and the challenges for us as investors in this space, because as you all know, and that's one of the reasons you are here, this space is changing, and last year was a wave of ICOs, initial coin offerings, new tokens, and that's what's going on now. So early on, we had the chance to invest in these companies, Factom, which is a leader in the blockchain applied to home mortgages in the US with a product called Harmony. RSK is the first company to actually manage to associate smart contract type, Ethereum virtual machine, and Bitcoin. So the transactions are happening on a sidechain, and then they are validated on the Bitcoin network. Indoors is the first kind of decentralized LinkedIn. They have 10,000 users now. This is one of our recent investments. And Blocks is a portfolio management tool for cryptocurrencies. These are some of our investments, a small sample. So in 2016, importantly, blockchain started to take a new shape in the mind and in the media and even in academics. And we start talking about blockchain as a foundational technology. That's very important because if you remember the internet years in the late 90s, this is when some people start to realize that internet would have this long-term impact. And the same way, the first years of Bitcoin, everybody was focused on the cryptocurrency and the value and the price of Bitcoin. But then academics, Harvard Business Review and more, of course, were looking into the technology itself, the underlying technology of Bitcoin, and they realized that this can create new systems, new social systems, new economic systems, and they started referring to as a foundational technology, and that's very important in our industry, and it shows a promise of a long-term impact. And The Economist as well had a cover, actually a cover story on blockchain and how it can, for example, root out corruption in land registries and root out corruptions in different sectors of our economy. So this is a lot of companies, a lot of banks, a lot of insurance companies, they started investing in Bitcoins and blockchain companies mainly. So what happened is they realized that there is a lack of talent in this space. This is a big problem. And instead of just going and looking for developers, they realized maybe it's a better way to actually acquire or to invest in startups, acquire the technology, acquire this great talented team, and work with them. And that's what happened basically between 2015 and now. A lot of these big banks and big companies started investing in this space. And this is what we call now, of course, retrospectively, the traditional type of investments. And then we're going to see what happened in 2016 and 17 and how this changed. Now, if you look at the top part of this table, this is the type of opportunities we had back in 2013, 14, 15. It was more like the infrastructure, the transactional part, transactional type startups. So wallets, exchanges, remittances. And then it moved to the blockchain technology aspect, so data, security, smart contracts, of course, Internet of Things. So this is the second wave of opportunities in terms of investment in this space. Now here, a lot of information on this slide, but basically I just want to show you different sectors that can be, that are being affected by blockchain, different sectors in which you have research or already applications, and a few examples of the companies we either work with, we have invested, or we are an advisor. And the great thing is these companies are all over the world. Coinsillium and myself, I represent Coinsillium as an advisor on companies with activities in Korea, activities in the US, and even here with Bundle, for example. So this is just to show the variety of sectors that blockchain is affecting, really. And again, you see the transactional type activities, and it goes all the way to stock exchanges, back office system for stock exchanges, banks, shipping, logistics, supply chain, provenance, digital rights, waivers. All this is made possible with these new technologies, smart contracts, and at some point, anchoring data, sending hash of data on the blockchain, for example. And in 2016, there was, in the fall of 2016, there were the first real, there were the first wave of ICOs, although initially, I remember very well when the Ethereum white paper came out, and then in 2014, Ethereum did its own ICO, and before that, 2013, Mastercoin. But these were very, very punctual, and not really, there was not that movement, that trend, really. But these re-emerged in 2016, and in 2016, after the DAO, in the summer, there was a company called First Blood, which is a gaming company, and they started raising very quickly a decent amount of money, a few $1 million, which at the time was kind of caught the industry by surprise, saying, okay, well, this company is not Ethereum, is not yet as well known, but still they're raising quite a good amount of money in a relatively short time span. So, and this was the beginning of the wave of ICOs, which are really been extremely active last year. And so these are actually some of the first companies that have done ICOs, with a few examples on how much they raised in the, and of course the time that you see here, the time is when the public sale was open. There's always a lot of work, a lot of preparation before that. So this gave rise to a whole industry, a whole ecosystem where you have now hundreds, maybe thousands of what we call ICO advisors, thousands of ICOs, marketing tools, and of course, hedge funds or what we call crypto funds, which are actually focused on this sector itself. So these numbers are the total market capitalization, and obviously this graph is very easy to read. So in 2017, there was a spike of new tokens, new interest, and a lot of the ICOs, as you probably know, take place on Ethereum. So there were new problems for Ethereum in terms of congestion of the network, but at the same time, increased interest in the platform itself, because that's where most of these token offerings take place. Now, what is also interesting is that from the time I started in this space, 2013, up until 2016, 17, everybody saw Bitcoin as the main cryptocurrency. But in 2017, we saw two things happening, a kind of shift. The first shift is that Bitcoin started representing less of a share of the total market capitalization of all cryptocurrencies, which is obvious because you had so many coming up, and Ethereum started the Ether price going up as well. But at the same time, we saw traditional investment from VCs and from angel investors actually representing less of the total funds raised. So that all happened around the same time, which is basically around June 2017. We've seen this shift of dominance of Bitcoin and at the same time shift of the type of investors and investment that were being done in this space. Now, this is just one slide with 100 plus ICOs. So we all know today that this is going to all kinds of sectors. Interestingly, now you can also find, kind of sectorial interest in this space. And so for, let's say, retail investors or for people that are new in this space, it can be confusing. And it's also a lot of information, a lot of data out there. Now, why does this happen? Why is there such an interest in this new form of funding in the space? Well, first of all, because a lot of the entrepreneurs I have been meeting now for almost 5 years, they were frustrated that, when you go to see a VC, you have to first explain what is blockchain, how can it change the world, at least a specific industry, how can it change things? And then they have to then spend some time for their own pitch. So some of the entrepreneurs were starting to get frustrated that they have to, educate actually the market, educate investors. So what a better way than to turn to your own crypto community, people who already know what is blockchain, already have coins. So that's one of the reasons behind this uptake in this space. Now, of course, entrepreneurs have limited options, as we all know, and each option has issues, and of course, crowdfunding, which can be close to an ICO. In many ways, crowdfunding is much less liquid because you're basically stuck on a position, and you have to wait for a long time to actually be able to sell your shares. And limited resources from institutions that's not only in blockchain, it's for entrepreneurs in general. Banks are not known to lend a lot to entrepreneurs. So basically, this combination plus the tech innovation, the fact that smart contracts make all this possible, has given rise to this spike in interest and in numbers of ICOs. So what are the main features of token sales, which actually are attractive to both entrepreneurs and investors? So as you may know, tokens are not shares at all in a company. They don't give rights to any assets of the company. They're non-dilutive in that sense. You don't put tokens in a cap table. There are different ways to look at it, but I look at it more as a pre-sale of the future potential of a platform, future service that can be provided by this platform. Usually, the only thing they give you is access to a platform. You don't have voting rights, no rights on the governance of the company, if there is a company behind it, and sometimes it's a foundation or a non-profit. You don't need usually to demonstrate revenue, but it's good to have an MVP. The legal and listing costs used to be much lower than an IPO, but all this is rising because of the numbers and because the lawyers are overworked and they have too many clients. So unfortunately, the costs are rising for the entrepreneurs these days. As I was saying, there is nearly immediate liquidity in the sense that you can, you have your tokens, and usually after a few months, depending on which stage you go into ICO, these tokens get listed and you can start selling them if that's your intention. So that's very different from what we usually know as a seed stage type of investment, early investment. And then there is this network effect, which everybody is looking for, and especially these ICO companies, because the mentality is, well, if these people are supporting me by buying tokens, hopefully I can transform these people into users of my platform. And so the end goal being the development of an ecosystem. This is just a quick slide with some numbers, but just to show the variety of the space. And this is taken, it's a snapshot from the end of June 2017, which, as I was saying, was this very important time in the world of ICOs and funding of blockchain. So what are the challenges for the entrepreneurs in this ICO era? So we all think, well, they're going to raise a lot of money rather quickly, but actually there is much more to it. There's much more work behind that. First of all, you have the security risks. We all know that there have been hacks. We all know that there are scams. There are site hacks, phishing, and fake sites. So, you know, they change one letter, they change one accent, and they try to pretend, some hackers try to pretend this is an actual project. And of course, this is painful for everyone, for both ICOs and for the people who fall into that trap. There is more pressure now because the SEC is looking for it and is looking for projects, ICOs, which may be breaking some rules. As you may have heard about the concept before, utility versus security tokens. When we see that there is a project going towards that would work better as a security token, we'd rather recommend and advise these companies to wait for the security token regulation. Right now, there are not many countries, jurisdictions where there is appropriate regulation for this and for ICOs in general. So there is a lot of pressure from the legal side, but of course tax as well. So entrepreneurs have to be careful with that. And also because a lot of these new rules are not written yet, so there is uncertainty around that. And for entrepreneurs, one of the challenges is that you start focusing too much on the token side of it, on the actual token sale, and then you forget a little bit about the development of your own product. So it's a lot of pressure for them. Of course, entrepreneurs should be aware that as soon as you start an ICO, your project becomes public. You're going to get questions 24/7. Are you able to both logistically and emotionally respond to that? I mean, it's a lot of work that sometimes entrepreneurs underestimate. And then once you have done the ICO, the token price can become a major concern. Not so dissimilar from the share price for an IPO, but at the same time, a token price has a lot of external variables attached to it and impacting the token price. So that's one challenge. Now, what are the challenges for investors in this area? Well, first of all, before we were used to only reason in terms of equity value and cap table, and now we have to focus as well on this new model, token value, token model. What is that all about, right? So this becomes a major concern. And sometimes these projects are not that clear or straightforward with all the assumptions and all the data that make them think, well, that's the token price, that's the token model, this is how it works. So we have to dig in and try to get this information out of them. As I say, unclear regulatory environment, which is always a problem for investors, because we want to make sure that we don't have problems in 2-3 years' time because of regulatory issues. There is, of course, an undefined relationship in a way, because we are used to be shareholders. We know what it is to sit on a board of a company. What happens now when we own just tokens? What is our relationship with this company, with this team? So there is a whole question around governance. There is a new layer of due diligence. We have to, go through the white paper thoroughly and go through the token model, as I was saying, and we have to make sure that, have an idea that this token will be listed on exchanges. Now, unfortunately, sometimes a very good team, a good project may have the wrong token model, so that can be an issue. And as I was saying, the success of the token is affected by external events. So, for example, there is a ban on ICOs in a specific country. There is a new regulation, new rules, exchange hacks, negative media at some point. So all this can affect the price without really coming from that company. This is just quick last slide on the parallel with the .com figures, in the sense that, as you can see, 86% of the companies had failed from the IPO boom. This is the dot-com era. And this is to show that there could be a parallel in the sense that ICOs, there are many hundreds, thousands, how many will actually succeed. Of course, today, 2018 will be a year of kind of reflection on what happened last year and regulation and new rules. So there is a lot of discussions already about how many of these will succeed, how many will fail. So what's happening really in terms of the blockchain investments? Well, ICOs are reshaping the role of VCs and investors. We are becoming what we call advisors. I prefer partners in a way. I feel more as a partner in an ICO than just an advisor, but that's a common term. The investors have become pre-sale deal hunters, so everybody wants to come in early, maybe get a bonus on a coin, getting more coins for your Ether. And the blockchain investors now, they facilitate the token sale, they become evangelists on this product. So it's a bit of a change of relationship here. And a lot of traditional investment platforms now become platforms for ICOs and to promote tokens in a way. So basically we're moving from an equity type investment to a token type investment, and we have to integrate all these new issues, and it's more data to process as well. So last slide, my predictions for the next 12 months. I predict that the ICO will still grow. I think there is still interest on both sides, investors and entrepreneurs. I think the token buyers will become more discerning and more demanding. And of course, some ICOs will fail. And more will fail, obviously, because of the dynamics of the space and the dynamics of investment in general. Startups are known to fail, so everybody has to be very careful in this space. The relationship with Evolve, as I was saying, we become advisors, we become evangelists of some projects to community support. Hopefully there will be improvements, and this is coming, improvements at the KYC levels, improvement at the security level, where it's easier, new wallets, where it's easier to, and new tools, for example, to buy into these ICOs in these tokens, so easier to manage. There are first regulatory frameworks. We work mainly with Gibraltar, for example, which we feel is taking the lead in this space, but there will be more coming around the world. We'll see the first M&A in this space. I think there will be about $10 billion of tokens sold in 2018 in general. And basically what's going on is that tokens are emerging as a new asset class. And so all of us, investors, entrepreneurs, and any token buyer, we're building the foundations of a token-based economy. And that's a very exciting part of what's happening these days in this space. Thank you very much.